Hyperliquid is up over 100% over the past 2 months, completely outperforming Bitcoin and all the other altcoins for one reason. I'm going to share with you why I bought back in February 12th of 2025, why I entered at $23, why it's now up to close to $56, $58 at the moment, where it's going, why I'm not selling, and also how you can get access to these early stage tokens, because Hyperliquid wasn't even available on the major exchanges when we entered, and that is because you need to be able to invest into early stage markets and showcase your ability to actually get advantage of these, early access tokens through DeFi markets, etc. I'm going to show you the research process we use internally. I'm going to show you why Hyperliquid is performing so well, and also share with you a little bit about my portfolio as I've recently changed my strategy, and giving you a little bit of insight as to why some of the projects I'm investing in now are more on-chain businesses versus my previous strategy. So first of all, Hyperliquid, it's at $58 at the moment. Why even is Hyperliquid, rallying so well? In this chart, you can see here, it continues to go from strength to strength. In the middle of the year last year, we had a bit of a run up of the market. All markets were up. But right now, Hyperliquid is, completely outperforming pretty much all other altcoins. So in the green line here, this is the others market cap. So this is, basically Hyperliquid in comparison to other altcoins. And the reason for that is that Hyperliquid is a genuine product. Believe it or not, people actually use it. And this is something that people have struggled with in crypto for a long, long time, is that they've only invested off, hype, not hype the project, actually hype interest in community and people getting excited about something, or an influencer promoting a certain project. And what we've got to remember is that, crypto is just continuing to mature, and it's going to continue to mature and respect the valuations of these assets based on actually their product market fit, the usability, and actually the revenue that it generates. So one of the biggest changes that, I made at the start of last year was really to cut out a lot of the noise in my portfolio and look at where the puck was moving. All right. What is going to be the next trend? What is going to be the thing that people are going to use more so in the future? And, looking at on-chain derivatives, and also the ability for tokenized assets to be traded 24/7. One of the biggest problems in the stock market right now, is that it trades between business hours. You can't trade oil. You can't trade stocks over the course of the weekend. And Hyperliquid was one of the first to come out and pioneer a platform that, that enabled you to be able to buy and sell tokenized assets. But more importantly, behind the project, it has a really, really strong token economics fit with product market fit. All right. What on earth does that even mean? Well, in the share market, all right, if we look at buying a share, the difference between buying a share and buying an altcoin or, cryptocurrency is they're very different, right? So if we look on the left-hand side, let's say that's a share. All right. And on the right-hand side, this is a token. On a share, we're buying like a piece of the business. All right. A piece of the business, and all revenue that goes into the share or into the company will produce, some level of value for you owning that share, right? Because as a company, you earn income, and the growth of that income then produces the value on the share. On the right-hand side, a token is not necessarily a representation of a share of the business. In fact, for most tokens, they're not even generating revenue that goes back to the token. The only thing that, this gives you access to is maybe voting. It gives you rights of access. It may give you parts of the representation of value, but there's sometimes, most of the time, these projects aren't even earning revenue. So the primary fit of a token going up is just the fact that investors are buying it. All right, retail. And when the retail market is down, like we are right now in a bear market, well, then what's going to hold a token up if people aren't buying it? It's the actual revenue of the project. And that is what Hyperliquid have done really well, because they've created product market fit. All right. People are actually using it. And in crypto, there's only really been Polymarket and a few other different projects that have genuinely come out and, created a project that people have wanted to use. And 90 to 95% of all of the revenue that gets created on the Hyperliquid platform from the fees goes back to buy the token. So if we look at the token economics of Hyperliquid, one of the things that really puts downwards pressure on the price of tokens is the fact that they have a lot of unlocks. All right. So if we think about token allocation as an early investor into some of these tokens, they will differ from project to project. So, Ethereum had majority public sale, which tends to be more positive for the market. You've got, ICP, which was far less open to the public market, and they gave a lot more to, insiders and allocation to VCs. And what ends up happening is when these, products and platforms or cryptocurrencies get launched on the open market, they have so much sell pressure because there's so many early buyers that are selling. All right. So what happens when, you usually see a project launch in terms of, actually being able to buy and sell it on market, like a Coinbase or something, usually what we see is this really sharp sell-off of a project. And the reason is because actually when a project gets launched on something like Coinbase or Kraken, that's not when the project started. Actually, it started way back here, right? And who's buying here? It's VCs, it's the team. All right. They might give some to, early adopters. And the worst projects in terms of being able to grow and, hit the market and actually elevate their price, the worst ones are is when they give a lot of capital and, allocation to those early investors and they allow them to unlock them pretty much on day one. So when the investors get to the open market, they are just dumping straight into the retail, all right? That happens pretty much 99% of the time. All right, because there's not enough demand, there's not enough buyers coming in from retail. What Hyperliquid have really switched to and why they continue to do really well is not only do they have, they still have unlocks, all right, because they want to pay the team and do certain things from the early adopters. But the thing that, we were really excited about is this buyback scheme, the assistance fund, which essentially automatically buys hype off the open market. So when you generate fees from the product, it goes back into the token and you're just constantly generating new buyers into the market and pushing the price of the token up. And that's really strong token economics. All right. It's the same reason why Bitcoin has continued to always lead the charge, because there's constant demand of the asset. All right. Now, if we look at something like Sui as an example, Sui has really struggled over the past, 12 to 18 months, because not only does it have a lot of unlocks, like a lot of tokens do, but there's not a lot of demand coming in because there's not a lot of, genuine revenue created from the project. Right. And it's not a bad thing that they have token unlocks. It just means that they need to keep up with demand. Otherwise, the project is going to go down. All right. So Hyperliquid, it continues to, not only form super well because there's product market fit, the token economics are good, the token unlocks are a non-factor because of the amount of unlocks that are coming in is being met by that buy pressure. But then also it has some amazing, recent, partnerships and also demand that's coming from not only institutions with a huge amount of ETF inflows now coming in for Hyperliquid. They've now got a partnership with Coinbase as their official treasury deployer of USDC. And one of the things I'll, talk about later in my video here, just in terms of my strategy, is the AI sector and why I'm so excited about the agentic world of AI and crypto overlapping and how Hyperliquid's going to be, involved in that. So if we come back to, why I bought at $23, the reason I'm not selling is because we're starting to continue to see a big shift away from traditional investments into having to wait and buy on exchanges, from traditional brokerages that are only available 9 to 5. And, literally this was just released the last few days. The SEC is set to release its so-called innovation exemption for tokenized stocks, paving the way for, digital versions of securities, essentially being able to tokenize these real world assets and allow them to trade on decentralized platforms, right? And it could reshape the landscape of the American stock market, which is huge, right? And that's already really happening right now in Hyperliquid, and that's why it's generating so much attention, and it's why there's so much growth. And, literally one of our members' sons got into Hyperliquid. He sent me this message yesterday. He's up 82% off the back of that since we shared it, at $23. And, this is the reason I'm so passionate about Bitcoin and crypto, because I've been in this space for 9 years. The best investments in the real world, all right, early stage startups, private equity, VC firms, they get access to the best investments, right? Because they're privatized companies, but they are sophisticated investors. They usually lock out, the middle class to lower class, because you have to be a sophisticated investor, or you have to be in that fund that even gets exposure to those best investments. In crypto, that's completely out the window. Anyone can get access to these tokens anywhere, any age, any size, it doesn't matter, because of the ability to be decentralized, and there's no restrictions on being able to enter, all right? Now, 99% of the cryptocurrencies in this space are absolute garbage and a crap, and influencers will sell you the dream. But if you can get exposure to the right asset classes and utilize a proper framework and research process to get access to these early stage investments, then they can be absolutely life changing, all right? There's no doubt about it. And, one of the biggest things that I have always, continued to harp on about to our members, and also just, where I've made most of my money in crypto, is getting into, what some people call the primary markets, early stage markets, DeFi markets, whatever you want to call them. It's essentially when you're getting exposure to these assets before they get listed on the major exchanges. All right. If we go back to when we posted and shared that we're buying, Hyperliquid in February of last year. All right. This was right back when, these Hyperliquid itself wasn't even listed on Coinbase, it wasn't listed on Robinhood. Another asset of mine, Syrup, that's done, really well, also wasn't listed on these major exchanges. You've got to get access to the DeFi markets to be able to get exposure to those. However, so many of these projects are absolutely garbage. So what is our research process? And this was a presentation that I went through with our members literally just yesterday. When we're looking, and we've got a full team of like 15 analysts at Collective Shift, how do we even find these projects? Well, you've got to be able to look at everything that's going on at one point. There's so much information at large, all right? The job of what we do, and the job of a good analyst really, or a team of analysts, is to really pass through this fire hose of information and really understand what is important to an asset having potential growth in the future, right? And now what we've been able to implement is, we have actually our own AI internal process. We've built our own infrastructure that does this at an even larger scale, that allows us to surface the best opportunities without having to do all that manual work on our own. And the thesis comparison for us and the way we look at investments now is really about on-chain businesses, all right? How can we structure our digital asset portfolio to produce investments that are creating real on-chain value? And it's something that I've always been a big component of in crypto, whether it be the metaverse, back when I made money there, whether it be Syrup, Hyperliquid. I want to invest into real world businesses. At the end of the day, altcoins are early stage businesses that we're backing. And a lot of them are crap because they don't have real any value, and they're trying to achieve a big dream. But the reason that these perform so well is because it's like buying the Amazons or the Teslas of the internet or Web 2 era, buying individual stocks. All right, the infrastructure level, like your Ethereums and Solanas, etc., are a good infrastructure play to kind of have a sector-based basket where you can kind of be a little bit more broader and a little bit less risk by having it in the infrastructure plays, but you're probably not going to get the upside. Where the on-chain businesses are those growth assets that have the most amount of upside. All right, now the problem or difficulty when trying to get exposure to these on-chain businesses is they move very quickly, and there's a lot of competition. All right, so really being able to structure and understand, okay, where is the puck moving? What are those assets that we're looking at? And, where is the value, or what products are actually generating, real world revenue, and what's actually something that we want to put our real world money in. All right. And that's really, core part of our ethos of where this space is going in digital assets at large, is that we are moving far more towards a more sophisticated market and less so speculative and focusing more on these on-chain businesses. And we're seeing that by, these institutions that are backing, the likes of Hyperliquid. Now, from, my portfolio and how that changes, and the reason I'm not selling Hyperliquid, as I mentioned, is that, the market is, very heavily in a downwards market right now. All right. And, Bitcoin, if we look at Hyperliquid over BTC, is completely outperformed. And what we tend to see, whenever we have these, corrections in a market, is we want to look at the projects that are outperforming in a bounce or, shorter term correction. And the reason we like to do that is because it gives us a good understanding of how the altcoins are being perceived by the market. All right. So when you get a huge outperformance against Bitcoin, that's a huge, point to be, getting at least some attention around. And also it's a good way to readjust and understand which parts of your portfolio you may want to remove. And, for us, where these early exposure opportunities are, you're going to get some wrong. All right. And this is the step 2 of the 5-step process that we take people through, where we get, properly positioned before the broader market catches on. And I'd argue right now, this is where the broader market is catching on for Hyperliquid. So I'd be careful about, taking any sort of large positions where we have these big sharp moves higher. Like as we get some corrections and some short-term sell-offs, they might be some good entry points for those of you that, currently don't have exposure. But this is where getting properly positioned before the broader market catches on is everything. All right. And getting positioned to those native markets is everything. So if you're interested in how we do that research process for you, and we invest alongside you, and you're actually able to track our portfolio and see, everything we're doing inside our platform, we actually just added a couple of new investments to our portfolio. And this is, some of our members just talking about how they signed up for this and how the breakdown is, is everything. And that's what we have. We have a team that we spend $300,000 a month on giving you what we're investing in, all the research and one-on-one coaching to guide you through it. So if you're interested, I'll put a link in the description below. But I've just removed a couple of, assets that I've had in my portfolio for a little while because the opportunity just isn't there right now. All right. And, I've spoken about yield and income on other videos. You can go check that out. But staying ahead and being able to optimize and restructure your portfolio and rebalance is really, really important, because holding the wrong coins at certain parts of the market can be very devastating. And we saw this with Bitcoin, late last year. We were taking some chips off the table on, some of our altcoin positions as we started to see the market weaken. Because if you overlay the Bitcoin price and you add in something like, Sui as an example, which we sold, probably 18 months ago now, Sui, and you can see the sell pressure that came from, let's look at sort of late last year. So Bitcoin being down 35%, all right, Sui's down 71%, right, which is wild. If you look at something like XRP, I'm not even sure about XRP. has done better than SUI, but you can see how they're like leverage positions, right? So altcoins on the downside are like leverage positions. So you need to rebalance. And that's the strategy that you need to implement to be able to adjust as the market, changes. But, then you overlay Hyperliquid as a real outperformer. You can see how well Hyperliquid has done in comparison. This gives me a lot of confidence that as the market starts to recover and Bitcoin continues to recover, that Hyperliquid will do well as well. And this is something that a lot of people don't realize and forget about, that, in the digital asset space, all right, most of the time, if Bitcoin is in a sideways or downwards trend, it doesn't matter how good your altcoins are, they're not going to perform well. This has been a big misunderstanding, I think, for a lot of investors that come into this space, that they fall in love with the crypto project, they think it's amazing, they believe in the vision of it, but then the market changes and they don't adapt. So that is why I back, the Bitcoin ecosystem, the digital asset ecosystem. It's why I'm so passionate about Bitcoin. A large percentage of my portfolio is in Bitcoin because of the reasons, that we all know and love about Bitcoin. But it allows me to protect my portfolio on the way up and on the way down. And where we're seeing Bitcoin continue to head, and, I won't talk about Bitcoin too much in this video, but, in terms of the growth of this asset class, we back the digital asset growth and confidence, which gives us the ability to buy more speculative investments like Hyperliquid. But 9 times out of 10, when you invest in these on-chain businesses and the market's going down, they will underperform. So right now, a lot of our portfolio is actually sitting in stable coins, right, earning a yield. Right, we're sitting in stable coins, earning a yield, waiting for the right time to strike to add some of these more like speculative plays. And we added a couple of investments literally last week, which I don't share here on YouTube because that's reserved for our members. But like those 2 speculative investments are a part of those primary markets, and it's being able to allocate when the market is in the most amount of fear is where the opportunities are. All right, there's in every market, people think, oh, they're too scared to kind of get involved into these assets, and what if it goes down and whatnot. Well, that's the opportunity, right? Some investors on the left-hand side, need 0% confidence. Some people on the right-hand side need 100% confidence, right? What happens between 0% confidence and 100% confidence? Well, 0% confidence means that you can invest and you really don't care, all right? The market might be down 90%. If you have, in terms of, the confidence not confidence in the project, but more so just like the level of conviction in, the thesis that you have on an investment. So as an example, Bitcoin right now is down 48%. For some people on the street, you go up to and say, hey, do you want to buy Bitcoin? It's down 48%. They're going to go, hell no, like it's down. They need a lot more conviction up here. All right. For someone like me that's been in the space for 9 years and you can take advantage of when assets are down, I'm willing to take far more risk. All right. So what's the advantage of taking more risk is that you get more upside because the price of the asset is down. All right. So if you're willing to invest and take, that level of confidence you have and the conviction in the asset, while most people are too worried to get in, well, that gives you the biggest amount of upside. On the other side, obviously, when you need 100% conviction and 100% confidence and you're waiting for the market to come up, that's where 90% of people buy. They will buy here. All right. And for us that are buying back down at the lower levels, this is where we take profits, and it just rinses and repeats. So you as an investor, I want you to take away that, don't, when you're building out your portfolio and looking to invest in these types of assets, don't just rely on waiting for an investment to get listed on Coinbase or waiting for the market to pump before you buy. All right. You need to lower your level of your risk, or increase your level of risk down this threshold so you can take advantage when the market is down here. It feels hard, but the hardest parts of crypto are usually the best thing, right? Whenever I've taken profits in crypto, it feels horrible because I'm like, this is never going to go down. It's always been a good time to take profits. Same when it feels the hardest to buy when the market is down. That is tending to be, historically a pretty good time to buy because of that sentiment and that fear that gets sort of kicked in. So when you're building out your portfolio, thinking about the next 5 years, always think about, how can I take advantage when most people aren't? Because if I'm always buying when people are, or if I'm always listening to the same people that everyone else is, like YouTubers or influencers, then you're always going to be 2 steps behind the 8 ball. You need to be able to get access into these early stage investments, looking at where the research is going and getting access before the majority of the market. Otherwise, you're always going to continue to be exit liquidity and always going to be buying at the top end of the spectrum when there's more downside than upside. Hope you enjoyed that video. That is why I hold Hyperliquid. That is why I continue to hold and why I'm not selling. If you're interested in how, we operate and you can get access to our research and how you can work with us one-on-one, we guide you through the process. We work with very limited numbers of people because what we do is pretty exclusive in a sense of the opportunities we get access to, and the team we have, we can only work with a certain amount of people. So if you'd like to check that out, click the link in the description below. Please subscribe, and I'll see you in the next video.